Well, my name is Denis Mukama from the Rwanda Revenue Authority. I've been working with the tax administration for over 12 years now, and research and policy analysis. And I've been given the opportunity to chair a very interesting session today morning, a session that looks at international experience in tax enforcement. Particularly, this session is going to give us an in-look or insights on some of the interesting policy decisions that developing nations have taken, with particular emphasis on VAT. Most of you have noticed, or if you've done a bit of background reading, you'll find that many countries, many developing countries, have picked up VAT with bearing in mind the advantages that the VAT system comes with. There is the paper trail it leaves that is used to probably even enforce other tax heads like income tax. And also the advantage that is seen in the fact that it has a self-regulating mechanism under the input-output mechanism. So there are different interests for both the buyers and the sellers to report correctly. But despite these advantages that are foreseen by or given by the VAT, we realize that there's still a big challenge in terms of compliance. So what these papers, today's sessions are going to do, are going to give us a bit of experimental insights in some of the challenges experienced in implementing some of these policy designs that are targeted to VAT. And with that, the first presentation is going to be made by Jensen. It looks at the strengthening consumer participation in VAT compliance strategies. Jensen is an assistant professor in Kennedy School at Harvard University. He received his PhD in economics from London School of Economics in 2016. His primary research interests are in public finance and development, and one set of projects he's working on or seeks to carry out is to study the factors that shape the capacity to tax and the choice of the tax policy over the long run of development. Anders is also a faculty research fellow at the National Bureau of Economics Research and an internal research associate at the Institute of Fiscal Studies. Without further ado, I'll welcome Anders to the podium.
Thank you very much, Denis, for the introduction. Thank you to IGC for hosting the conference. I'm incredibly pleased to be here, and I look forward to your thoughts, comments, and suggestions. So as Denis mentioned, I'm going to be talking about VAT, and I'm going to focus on the customer, the extent to which customers can play an important role in enforcing VAT compliance strategies. Let's see. Oh no, sorry, that was the wrong click. All right, there you go. Okay, so to motivate, and sometimes Denis made the proper introductions, but the value-added tax is one of the most important taxes around the world. I think in the report that we've been handed out, the front page says that it's now been adopted in over 160 countries, and it constitutes, if not the most important source of revenue, then certainly one of the 2 or 3 most important sources of revenue in most countries around the world. Electronic billing machines, or I'll call them EBM for the rest of this presentation, is a potentially incredibly powerful compliance tool to help ensure that taxes are collected at every part of the value chain that underlies the VAT payment structure. Electronic billing machines are required when generating invoices. So a firm that has an electronic billing machine installed will use the EBM machine to either generate an invoice when it sells to another firm, or in principle when it sells to final customers. And this wealth of information that's produced by the EBM is, of course, potentially very powerful from the standpoint of the tax authorities. So in this particular case, for the Rwanda Revenue Authority, I'll be talking about, it generates a wealth of information about the sales, about the potential identities of the customers of the firms, and it can have potentially transformative aspects for making sure that enforcement is levied at each stage of the value chain. As Dennis also mentioned, there are still issues related to non-compliance that persist. And a key issue in non-compliance that's certainly not particular to Rwanda, but that's a kind of general feature in countries around the world, is this issue of enforcing VAT payments on what's called the final stage of value chains when sales are made to final customers. And that's due to a very simple reason. It's that customers who walk into a store and who buy a good don't have any particular incentive necessarily to ask for that receipt, because unlike firms that are part of a chain, they have incentives because they can use those receipts to deduct the VAT from their own tax base. At the final stage, the customers, they don't have any tax payments that relate to VAT, so they don't have any particular direct incentives to ask for the receipts. So because of this limited incentives, we often see non-compliance being a particular important issue at this final stage of the chain. In order to address that kind of concern, governments around the world have tried to implement different schemes to address the compliance issue at this final stage. And I would categorize them as being sort of three key policies that they have implemented in order to ensure that consumers participate and ask for the receipts. The first is a lottery. So the basic idea here is that customers will ask for receipts in stores, and through various means, these receipts will be authenticated by the revenue authority of the country or by some other institute in the country, and they can enter those receipts as into a lottery that will be drawn at a particular frequency. And so customers can win prizes essentially for participating and by asking for the receipts. The second sort of main system of incentives that government has implemented is a rebate system, in which when customers ask for the receipts, they then go home and then they will submit the receipts electronically using an online platform, or maybe the firms at the final stage will submit the receipts on behalf of the customers. And these receipts are then all centralized at the level of the tax authority. And on a certain frequency, maybe on a monthly basis, the customers will essentially receive in their bank accounts a rebate that accounts for a small portion of the total value of the receipts that they entered in that given month. So the sort of main distinction, and this is something else I'm going to come to in the context of Rwanda, that we also see in our case, the main distinction I personally think between a lottery system and a rebate is essentially between a sort of more infrequent possibility to win a high prize and a much more frequent possibility to win lower prizes along the way. The third sort of incentive scheme, so to speak, that governments have tried to implement to stimulate consumer participation is, in some sense, a whistleblowing mechanism where there's an online platform or there are other channels of communication through which customers can, in some sense, flag stores that they think are potentially not compliant with the use of their EBM machines, or just more generally they're not more generally compliant with their VAT payments. And oftentimes, the whistleblowing mechanisms is combined with either the lottery or the rebate system, because it's considered that customers in general require some form of financial incentives in order for them to participate. There's some evidence from countries around the world on the effectiveness on each of these different policies. I won't go into the details of sort of specific case studies. I would say that I think a general point that I take away from reading this evidence is that the extent to which each policy can be effective is very much dependent on the specific cultural, economic environment and administrative environment of a specific country. And that suggests that we should have country-specific diagnosis and country-specific policy findings. And very much in the context of thinking about sort of country-specific diagnosis and country-specific policies, we struck up a joint research policy engagement with the Rwanda Revenue Authority to try to seek cost-effective ways that will ensure that customers participate in enforcing VAT at the final stage. It's a joint research collaboration that's been going on for a little while, and that has the Rwanda Revenue Authority as the key government counterpart, and that on the research side combines people from a little bit all over the place. So there's some people from Harvard, from Columbia, from Georgetown University, and also from the London School of Economics. So the research question that we set out to try to address, one of the first ones that we try to set out to address in this joint policy research agenda, is a fairly straightforward one, and it's to understand what are the constraints to consumer participation in the specific case in Rwanda. And in order to do that, we designed a survey in close collaboration with the Rwanda Revenue Authority and a locally based survey team. And it was a survey that was designed to be able to answer, to measure, and to ask customers for their views on the sort of key constraints to ensuring higher compliance at the final stage and to get them to participate in these enforcement strategies. We had 550 respondents that came from major cities all across Rwanda. So we wanted to make sure that we were sampling a set of survey respondents that would be more or less representative, not just of Kigali, but all of the major cities across the country. We combined in-person surveying and phone surveying. And the sampling was in areas, of course, we didn't have neither the funding nor the logistics in some sense, for the moment at least, to do sampling in all areas of the country. So we sort of picked specific areas in all the major cities of the countries where we knew from administrative data that there was a high number, there was a large concentration of firms that used EBMs. So that increased the likelihood that we would walk into these areas and we would be able to speak to customers who have experience of engaging with firms that have these EBM machines. We had several themes in the survey. One theme was the extent, more in a general sense, that customers knew about the electronic billing machines and if they knew what they were intended for. We asked them about the constraints that they faced when they possibly tried to ask for receipts in a typical store. We asked them about their knowledge of and potential participation in the EBM receipt lottery that Rwanda currently implements. And we asked them about other alternative schemes under sort of hypothetical reform scenarios. Okay, so I'm going to go through summarize a couple of the main findings of the survey. So the first finding is that the potential participation in the lottery scheme seems to be constrained by two things. The first is the criteria that are required in order for someone to sign up and participate in the scheme. And the second constraint on participation is more simply just, for some customers, just a lack of knowledge that this incentive scheme exists. So let me just summarize that in a little bit more detail. We found that the potential eligibility based on usage is high. And by that, I mean that of the customers that we surveyed, over 95% of them had access to a mobile phone combined with either mobile banking or an actual bank account. And these are the two main criteria that are required in order for a customer to use this EBM receipt lottery scheme. In contrast, we found that if we think of the criteria that determine whether a potential particular customer is eligible, there we found that the criteria were more constraining. So in particular, the most obvious way in which a customer in Rwanda can sign up to this lottery scheme is by going online, so finding some form of access to the internet. And there we found that about a third of the customers either don't have access or don't use internet on a regular basis. So we think that that constraint seems to be more binding than the sort of usage criteria. There's interestingly very large variation across different parts of the country in the extent to which customers have access to the internet. So this potentially means that a policy which tries to target the areas where internet access is particularly low and tries to remedy alternative means to ensure that people can sign up. There was also around 40% of respondents which sort of at first hand mentioned that they did not know about the EBM lottery scheme in particular. So this also suggests that just general widespread dissemination of the government's efforts can also have potentially quite large impacts. The second finding from the survey is we essentially wanted to try to ask the question of, if we think of 100% of receipts that are generated in Rwanda at any given point in time, out of those 100% of receipts, how many eventually end up in the hands of a customer with an EBM receipt attached to them. So I'm going to try to walk through a graph that shows what we did. So if we think of So if we think of this 100% here as being made up of 100% of receipts that are generated at any given point in time in Rwanda, then we found that around 40% of receipts are lost in the sense of not being eligible for the receipt scheme from the simple fact that they are made from customers shopping in stores that do not have EBM machines. So this is part of the effort that Rwanda is now trying to expand EBM machines to a larger set of firms. But at first hand, given in the current landscape, there's already around 40% of receipts that are not potentially subject to the EBM lottery simply from the fact that they are purchases that are made in non-EBM stores. The next sort of loss, if you will, or the next constraint in that sequence from putting an EBM receipt in the hands of our customers is that within the set of EBM stores, there's a large percentage of customers that simply don't ask for a receipt. So I'll show you the number in a second, but this turns out to be the largest drop in potential receipts that can be used for the lottery is when customers enter stores where EBM machines are installed, but they don't ask for a receipt. And I'll get to why that occurs in about a minute. The third dimension is not very important. We initially thought before setting out that this would be more important. There seems to not be a large number of receipts that are essentially not generated despite the customers asking for the receipt. So it seems that conditional on a customer entering the store with an EBM machine and asking for receipts, most of them are effectively handed a receipt at that point. And so what's left, the yellow share here that's left is the set of the percentage of the receipts where an EBM receipt is generated and is handed to the customer. So what this means is, the sort of highlights is that approximately 40% of purchases are made in non-EBM stores. So that's the first sense in which the participation in the lottery scheme is a little bit constrained for the moment. The second, and this is perhaps the largest constraint, is that only around 15% of customers that enter EBM stores ask for a receipt. If you ask for a receipt, you're usually given a receipt, so that happens in 90% of the cases. But so what happens at the end of the day is relative to, say, 100% of hypothetical receipts being generated in Rwanda, only about 8% of those actually end up as receipts that customers walk out of the store with and then have an EBM number attached to. And the point of various incentive schemes is essentially to try to increase this yellow share so that it becomes a much larger part of all the receipts that are generated in Rwanda. The third finding that came out of the survey is that participation from customers is mainly driven by a straightforward cost-benefit analysis. And by this, I mean that when we asked people, what are the main benefits you think of participating in the lottery, the overwhelming majority very simply answered that it's the possibility to win one of the lottery prizes. And that makes total sense. The sort of second most important thing seemed to be a motivation to do the right thing, insofar as EBM machines help ensure compliance and help collect tax revenues and that foster development. So this turned out to also be an important margin. On the cost side, the main cost that people perceived from participating in this lottery was that over 55% reported that either from having done so in the past or from thinking about what they had heard from others, they report having to pay what we call a price penalty from asking for a receipt in an EBM store. And this very simply means that if you walk into a store that has an EBM receipt generator and you ask for a receipt, the owner of the store will in return reply, okay, that's fine, but then I'm going to charge you a higher price for that good that you're asking for. So this is what we call the price penalty. The fourth finding is that participants are younger on average than younger than the average citizen, and they follow the TV and radio quite a lot. The TV and radio being the main sort of sources of dissemination for the outcomes of the lotteries that take place. But they often participate only once. So let me show you that in a little bit more detail. We asked the respondents of the survey to describe to us what they thought were the main characteristics of other participants that were participating in the EBM lottery. And what we found is that 82% say that participants follow the news, the TV, the radio, the media, more so than the average citizen in Rwanda. 35% say that the participants are younger than the average citizen in Rwanda. But in contrast, and something that again went a little bit against our priors, but which is a potentially hopeful finding, is that only 11% say that they think participants are more wealthy or more educated than the average citizen. So it suggests that the main channel through which customers participate are from following the news so that they're aware of the fact that these schemes are taking place. The extent to which a particular customer participates, we found using administrative data that just under 60% of a particular customer who participates only participates once. And by this we mean that a unique phone number is only picked up once in 60% of cases in the participation data. However, for those who do participate more than once, the average duration of participation is about 2 months. So this suggests that we have two main sets of participants. One is a set of participants who participate once and either win, or maybe they don't win and they get discouraged. And we have a set of participants who participate more frequently, and they do so over about a 2-month period on average. So the question is, how do we design a policy that takes into consideration these findings that we uncovered in the survey? So this is the stage at which we currently are, together with the Rwanda Revenue Authority, and we're discussing potential policy interventions. But when we asked in the survey, what would consumers like in potential reforms of the current schemes, they emphasized that they would like a scheme that gave them a larger return whenever they made an effort, in the sense of having more frequent rewards, and in terms of having rewards that were more certain. What this means is that you could either design that under a sort of modified lottery, but where the prices that are paid out from the lottery are smaller in value, if we want to keep this revenue neutral, but they occur on a much more frequent basis. So instead of making the lotteries on, say, a quarterly basis, you make the lottery on a monthly basis. You could also implement this under a VAT rebate scheme. The key thing that a VAT rebate scheme would eliminate, that seems to be a constraint on participation, is it would essentially eliminate the uncertainty that's inherent to a lottery scheme. It seems when we asked the customers who thought about participating in the scheme, they didn't quite seize the fact that a lottery is inherently a random draw, and they thought that they had done something wrong when they weren't being essentially rewarded for their efforts under the lottery scheme. And in contrast, a VAT rebate scheme would eliminate that certainty and would allow them to be paid out a certain amount on a much more continuous basis. Okay, so I jumped a little bit ahead to what I was going to say here. We sort of think for the moment that a rebate system could alleviate some of these constraints. It would increase the frequency of payment, and it would remove the uncertainty that's inherent to a lottery scheme, and the customers seem to like that, according to the survey. And the second thing that a rebate system could also alleviate that a lottery system could potentially not, is that you can essentially set the rebate rate, so the rate at which customers are paid back part of the value of the receipts, such that what we found, this price penalty in the ABM stores, is lessened. So we can't make the price penalty go away, but you can think of a way to set the rate so that the cost from the customers for asking for an EBM receipt is much less severe. But of course, the transition to a rebate system from the current lottery system can prove potentially difficult. There could be some misunderstanding about which are the eligible versus ineligible stores. There could be setup costs for participants in the sense of having access to internet, for example, and these setup costs might be larger than under the current lottery scheme. And our survey certainly found that setup costs, participation costs for customers who have a lot of willingness to participate is really a key constraint. And just more generally, if the policy transition is not widely disseminated, then the transition from a lottery scheme to a rebate scheme may create some extended confusion and discourage participation. So we're currently engaged in a sort of roundtable discussion with the Rwanda Revenue Authority to try to take in all the different diagnostics that we uncovered during the survey, and we're now thinking about the third stage, which is essentially the sort of design and implementation stage for a policy intervention. This has been preliminary work, and so we're very grateful for your comments, thoughts, and suggestions. Thank you.
Thanks, Anders. And this is really an insightful presentation, and puts me in quite a strange position to comment on something that we're working together with Anders, and that's work in progress. But yeah, there's so many things that it puts out through. It highlights some of the strategies that countries are using to improve compliance. It looks at some of the constraints, as is demonstrated, to some of these strategies, and gives a bit of different policy options. That's work ongoing. Let me remind the audience that we'll take comments after the second presentation, and I'll request you again to stick to your comments. Jot them down, and let's have them across the table after the second presentation. And now, which goes to the second presenter. She's Justine Knebelmann. I don't know the French, but I hope it's said correctly. Justine is a PhD candidate at the Paris School of Economics. Her research focuses mainly on taxation and fiscal capacity in developing countries, which with particular emphasis on sub-Saharan Africa. She has several ongoing projects in partnerships with African revenue authorities, including the current IGC-funded project with Jonas and Miguel Almunia. All right. And this is particularly on compliance in Uganda Revenue Authority and a project on property tax reform in Dakar, Senegal. Before starting her PhD, Justine spent a year at the Uganda Revenue Authority in the research department and a year as a visiting student in the economics PhD department at Columbia University.
Thanks for the introduction, Denis. Hi, so the project I'm going to be presenting, so you already mentioned the researchers that I'm working with for this project, and it's a collaboration with the Uganda Revenue Authority and notably with the RPD department headed by Millie. So this project is also about VAT, but it's a nice complement to what Anders was presenting, because instead of focusing on the customer side, here we're going to be focusing on firm-to-firm transactions. So as has already been said, there's been over the recent decades a large and quick increase in the number of countries adopting the VAT. So this is what you can see here on the left-hand side. And so nowadays it's around 120, you said 160 countries which adopted the VAT. And so this fiscal instrument has obviously also spread to developing countries. So for example, in Africa, there's now over 40 countries which adopted the VAT. And so obviously a policy relevant question is whether this fiscal instrument, which has some complexities, has enabled these countries to raise more revenue. And in this respect, I thought it was interesting to mention some of the conclusions of a paper by Michael Keane and Ben Lockwood on the VAT, in which they mentioned that for sub-Saharan Africa, in particular, the evidence is still mixed on the effects of the adoption of the VAT. And they also highlight that significant work remains to be done in improving the functioning of the VAT in much of the region. So I thought that this was a very nice motivation for several of the projects being presented today. So one of the key reasons for which the VAT has been so widely adopted is because of its supposed revenue efficiency. And so it's already been briefly mentioned in the introduction. Why is the VAT considered to be revenue efficient? First of all, because it generates opposite incentives for trading partners, for sellers and buyers, which is supposed to limit collusive evasion. And in addition, the VAT generates information trails, so records of the transactions on both sides, on the seller side and on the buyer side, which are supposed to limit unilateral evasion. However, for these mechanisms to actually be effective in curbing VAT evasion and allowing compliance, there are some conditions that need to be in place. So first of all, the Revenue Authority needs to have the resources and capacity to be exploiting this information fully. And secondly, if we want these mechanisms to have a deterrence effect to limit evasion to start with, another condition is that taxpayers must be expecting that the Revenue Administration has the capacity to be doing these verifications. And so one of the research questions that is driving this project is to assess the extent to which these information trails are effective at curbing VAT evasion in the context of Uganda, and if there's scope for improvement, how can this information be utilized in the most optimal way to improve tax enforcement? So just to give a quick overview of the collaboration that has been going on between our team and the URA. So the first initial collaboration started all the way back in 2013. Since 2015, there's been a full-time research assistant within the RPD department in the URA. 2 IGC research reports have been produced in 2015 and 17. And since 2017, we've been designing with the URA a compliance program, specifically to see how these information trails could be utilized to improve compliance in the VAT. And so this has been carried out as a full-scale randomized program a few months ago. So I'm going to be sharing some preliminary results, although we're still really just getting the data. So a very quick background on the VAT system in Uganda. So the VAT tax revenues amount to around a third of tax revenue in Uganda, and they're divided almost equally between VAT on domestic transactions and VAT on imports. And so I'm going to be showing here some results for fiscal year 2015. And so in that year, there was around 16,000 VAT active firms. As in most developing countries, a very large share of VAT revenues come from a small number of the largest firms. Something that is also in line with what is observed in many developing countries is that there's a large share of firms. So in the case of fiscal year 2015, 30% of VAT firms, which report a total value added over the year, which is either negative or equal to 0. So this is a pattern that's shared in a lot of developing countries, but is obviously quite suspicious and hints to some potential evasion. And finally, just a detail on the administrative modalities. So firms remit monthly VAT declarations, all firms. They do so electronically, and something which is key to our analysis is that they also have to submit transaction level records in which they list all their transactions and also indicate the identification number of their trading partner. And so this is how we're able to match sellers and buyers and to reconstruct the pairs of firms which are trading together. So now I'm going to be explaining the methodology that is used to detect discrepancies and showing the revenue consequences that we found for one fiscal year in 2015. And after that, I'll move on to explaining in more detail the compliance program that was put in place recently based on that same methodology. So for our analysis, what we do is that we sum up domestic transactions at the firm pair level for each month. So for example, if firm A is selling to firm B, we're going to sum up everything that firm A declares having sold to firm B, and also sum up everything that firm B declared as having bought from firm A. And so if we call S the amounts that are reported by the seller and B amounts reported by the buyer, there's 3 situations that we can observe at the pair level for a given month. Either S is equal to B, so this could be because both firms are reporting truthfully, or because there's collusive evasion, and in that case we can't observe it with this method. We can also observe that amounts declared by the seller are smaller than those declared by the buyer, and this is what we're going to call misreporting in our context, and it could be due to the seller or to the buyer or both. And there's also some cases, as you're going to see, in which the amounts declared by the seller are larger than amounts declared by the buyer. And so in our framework, we're going to assume that this is due to the buyer underreporting its purchases. And so we calculate these discrepancies for the whole fiscal year. And what do we find? We see that there's a wide misreporting amounting to over $200 million US, which corresponds to 67% of the total net VAT due for that year. There's also a lot of underreporting, so the opposite cases. However, the amounts involved are smaller. So then if we combine both over the whole year to see what are the implications in terms of revenues, we figured out that if all these cases of discrepancies were corrected to reach a situation in when there's no longer any discrepancies, this would lead to an increase in net VAT of $128 million US, corresponding to 40% of the VAT due for that fiscal year. So this shows that there's scope for improved compliance based on data that is already within the URA. And so the next step is to see how this can be utilized in a compliance program. So how was this program designed? We identified over 1,300 firms for which misreporting had been detected in recent months. And a VAT monitoring letter was sent out by the URA DT department to these firms, saying that the URA had been able to carry out this verification and had identified discrepancies with a specific trading partner. And the amounts involved were also listed, as well as some example of cases to strengthen the credibility of the letter. This was carried out as a randomized experiment, meaning that out of a universe of firm pairs with similar characteristics and in which, for all of which misreporting had been detected, the targeted firms had been drawn randomly, and that will allow us to compare these treated firms, the ones receiving the letter, with what we call the control firms, firms with similar characteristics but which did not receive the letter. And we're going to compare the behaviors of both types of firm pairs. And in each pair, the letter could be sent either to the seller, to the buyer, or to both. And so this was carried out in February, from late February to April of this year, 2018. And the letters were sent out both physically and then followed up by an email to make sure that we would reach the largest number. And indeed, 91% of the targeted firms received the communication. So now, what are the kind of outcomes that we're interested in? I'm going to show a few preliminary results, but here again, we're really just starting to look into this. So the first type of outcome we're interested in is the immediate response. When we're telling firms, we saw a discrepancy for this month with this partner, are they amending, are they reacting to that message? Then something else we're interested in is what's going on in the months following that. Are they changing their behavior, misreporting less because did they interiorize the fact that the URA is now doing these verifications? And then obviously we want to see whether there's effects on their overall VAT liability, because this is what will end up in increased revenue. So I'm just sharing some results for a few of these outcomes. So here I'm showing results for the buyers on the left and for the sellers on the right. And each time in blue, you have the control group. So those are firms which did not receive the letter. And in red are the treated firms, meaning the ones who did receive the VAT monitoring letter. So we observed that treated firms file more amendments after receiving the letter. These results are only for the first 2-3 months after the program. We also observed that treated firms are slightly less likely to misreport in the few months following the treatment. And when they do misreport, they misreport slightly smaller amounts. And finally, we do see a slight increase in their VAT liability, which is promising because, as you know, when firms misreport less or amend, they could also be trying to use strategies by which they change other aspects in their VAT returns and end up with an unchanged VAT liability. This happens in some cases, but we see that overall, on average, there is an increase in VAT liability. Now, if we dig a bit deeper in the types of responses of the firms, overall, there's around half of the targeted firms which respond in some way, either by coming to the URA, by making a phone call, by writing an email. And there's around 20% of firms which actually submit an amendment in the few months following the treatment. And when they submit an amendment, this increases the liability for 62% of the buyers and 21% of the sellers. A third of firms who do not amend indicate that the discrepancy that was indicated in the letter was the fault of their trading partner. So I think this is interesting to think about how the URA is going to decide to follow up on these cases, and also to see whether the trading partner that they're in some sense accusing of leading to the discrepancy is going to react. So I thought that was an interesting figure. And something else that's also interesting to note, because it has maybe different policy implications, is that 18% of firms who amend indicate that they had lumped the sales to their trading partner with their sales to final consumers, and that's why it was not listed as it should have been in their return. So this maybe has implications more on the administrative modality side, if it's true that this was the case. And so we still need to be investigating further to shed light on all these mechanisms and see what's going on in more detail, and also what's going to be going on in the next steps when the URA follows up with these different cases. And so just to conclude, I wanted to hint to some aspects that we need to look into starting now. So first of all, here I was sharing the effects for all the firms that were targeted by the letters, but now, as we often do in randomized experiments, we want to focus looking at firms that actually received the treatment and focus on the treatment on these treated firms to see whether effects are larger there. Obviously, something that's of interest is seeing what are the effects in the longer term. And so for this, we're just waiting, of course, for months to go by and to get more data and see whether taxpayer is changing in the long run after such a program. We're also interested in seeing whether there's spillovers to trading partners, firms that were not targeted by the letter, but which trade with some of the treated firms, because maybe there could be communication going on among these firms, or else just firms being more compliant, so forcing their trading partners to also be more compliant. So this is something we want to look at as well. And then we also need to be studying heterogeneities. So here I was just showing results for all buyers and all sellers, but obviously we expect there to be a lot of heterogeneity by firm size. Larger firms are not reacting in the same way as smaller ones, so this is something we really need to look into. There could also be heterogeneities across pairs, depending on whether only a seller or only the buyer received a letter, or whether both firms in the pair received the letter. So we also want to look at that, since that's a stronger treatment for the pair. And lastly, we think there might be heterogeneities depending on the share of sales to final consumers, because since this focuses on firm-to-firm transactions, it maybe affects in a stronger way firms for which these transactions are a largest share of their trade. So I think I'm going to stop here, and we're really happy to hear any comments and feedback.
Before I open up the floor for any comment, feedbacks, I'll just point one or two issues to myself that, as a chair, I take the privilege of taking the first questions. So, just a few questions to Anders and Justine. One, probably to Anders. Like I said, it's quite hard to, make anything for the work that we're holding together. But I think there's some interesting feedback that you're showing from this research. And it's the issue of why people are not giving out these receipts, despite the effort of giving electronic billing machines. They were introduced with a view that they will improve compliance. But we're still facing the challenge that still people are not getting they're not giving those receipts. And for me, I think it's pointing to one big aspect of the quick wins when the buyer gets an instant price reduction. Because if they ask for a receipt, they'll be asked to pay higher to include the VAT. So now I'm asking myself, with this price challenge, how do we try to overcome this with the different alternatives? There's the rebate, there's the improving the tax, the lottery itself. But there's still that big animal of people getting the quick wins immediately. If I'm going to buy the product and you give me a price reduction there and then, I'll not wait. It's not in my interest to wait for a lottery that is going to come, I don't know how many months down the road, for which I may not. So what are your suggestions or your thoughts on how to overcome this challenge? And maybe to Justin, I like the interesting fact that you're giving us insights on all these huge volumes of data we have in the tax administrations. And now we are trying to utilize them to, improve compliance. And you point something of the potential revenue gains. I think you talked of 128 million US dollars. What are the assumptions of this revenue gain? Because I know when, like you said, there's a possibility of misreporting by different categories of whether the buyer or the purchaser. What are the chances of getting this particular amount? What are the assumptions that you put behind to come up with this number? Because I know probably it's a genuine issue of misreporting, and when you press these taxpayers through this communication and the message you're asking them to prove themselves, they could actually come out with the authentic numbers, and then probably that will affect the revenue expectations. Or as you push taxpayers, from my experience, they also design alternatives to evade. They could take on collusive evasion, where both of them agree to a certain amount, and they will report exactly the same amount, but at the lower level. So this also will compromise the expected revenue gain. So just shed some light on the assumptions. And secondly, what are when I look at the analysis, it looks at the report by the seller and the report by the buyer. But did you have a chance to look at the internal discrepancy, the report by the taxpayer himself? Because they put a declaration, and on that declaration, which is the basis for the tax, they also attach annexes, which should be like evidences. Did you try to look at the discrepancy between those two reports, the declaration itself and the associated annex for that particular taxpayer? Because here you're looking at it in different, the buyer and the seller. But what about the buyer report individually and the seller report individually? Before I open up, what I'll do is now I'll open up the floor and I'll request for maybe 3 questions or comments or before we overload, so that we do not overload the presenters.
Thank you all for the very good presentations. I have 2 or 3 inputs. One is something I'm always passionate about. These are studies we have done together. And Justine knows, for me, I always expect to see 1 or 2 names of the people whom we have worked with. So I would like that we keep, I know it's learning and it's a change issue, but we keep encouraging to have, like I would expect in the first one to see Denis's name. I would expect in the one for Justine to see Dorothy or any head of the function that has supported, because without the background information, we can't get what is being presented here. So it's important that we recognize that input. Next, I would like to note that as revenue administrations, it's important the kind of systems we bring on board, because without the kind of system we have in URA, the e-tax, then we would not have been able to get data to that detail for the team to be able to analyze the buyer and the seller. Most of this information is based on the attachments that have to come with the various returns. So for us to be able to get input, it's important for us to have systems that can give us that ability. I just wanted to mention 1 or 2 things that have come out of this, though it's still in progress. One of the things we are looking at that has caused a very big jump in revenue in our month of June is the VAT fraud scheme. And it came through some of these, identifying some of these, and went into our tax investigations and found that we are having people who are printing receipts, printing invoices. So this has been put into the public, and people have paid, and others, their tins are going to be they're going to remove their TIN numbers and other things. So we can share later when we get more detail. Another one that came through that we were still looking at, and I believe will support this, is regulating of tax auditors. We found that for some of this information, it is the tax auditors who support these clients who are doing this. So you may find that the client is not even aware of what is happening. So one of the things we're doing is to regulate tax auditors, and some of these, as we finish these studies, we will put this in the checklists of the tax auditors. If you're found to have so much misreporting in your clients, then you're struck off the list or something like that. Thank you very much for the studies once again, and we look forward to much more collaboration. Thank you.
Thank you so much, Ronald Waiswa. Yes, for increased research uptake, let's try as much as possible to engage these tax officials. I think it is what has helped us with the ICTD, even from problem identification to methodologies and writing these whole papers to the end and even presenting, engage them. On the first presentation, I just basically wanted to talk to the presenter to help advise on how effective can the receipt campaign be. Because back home, I think we have been having this for over a year. Give me my receipt campaign, and I see taxpayers winning URA rewards. But I wonder how effective it is, because these receipts are provided by these business people. So if I'm a businessman, I can still own 4 receipt books. So I give from 4 different receipt books, and when the URA comes, I can just give them 1 receipt book. So how can we make the receipt campaign effective? Even if we give receipts to clients, I don't see it effective.
My name is Joseph Serengo from the Kenya Revenue Authority. I also have 2 comments. First of all, I would wish to also point out that in Kenya, we also had the challenge of some firms printing illegal receipts. And that case was unveiled last month, and steps have been taken against the culprit. Let me also thank the presenters for these studies. The first one by Anders, I was wondering whether actually the main challenge with VAT compliance is to do with the consumers. In Kenya, we have found out that the main challenges are to do with non-use of electronic billing machines, electronic tax registers. Some institutions have various counters, and you realize that on some counters, they do not actually, the machines could, customers will be given receipts, but you realize that that line is not linked to the revenue authority. So a proportion of those sales will not be captured in the VAT. Then in both studies by Anders and Justine, I'm wondering if at all the results would have been different if we disaggregated the firms into small and large. In Kenya, we have had a problem with mainly small firms. In fact, when it comes to VAT refunds, we found out that there is a large proportion of refund claims coming from small firms, yet VAT payments over 70% come from large firms. So our concern is how come small firms are the ones making large refund claims, yet they pay a very small proportion of the VAT. So maybe designing the studies to analyze big firms and small firms separately would give us more insights into this. Then finally, we've also had a challenge with the enforcement of receipts. So I think this is also where we revenue authorities need to work closely with the judicial system to be able to enforce. We have had cases in the country which have been dropped on the fact that it's not a must that a client has to really get the fiscal receipt. So that one now becomes a challenge actually in enforcing VAT compliance at the consumer level. Thank you very much.
Yes, good morning, everyone. Yenda is my name from the Zambia Revenue Authority. I have one maybe clarification for Anders. You mentioned that about 40% of the receipts that you considered were found to be non-EBM, which I would take to be non-fiscal register receipts. Now, Zambia is currently implementing the electronic fiscal registers, which are like EBMs. I think we're currently piloting to a number of firms and so forth. But then I wanted to find out what would be some of the, I know lotteries, like you mentioned, and the tax rebates are possible interventions to encourage consumers to demand for receipts. But what are some of the maybe quick measures that could be implemented to make sure that you maximize the use of these machines by the sellers? Because I mean, 40% is quite big. If you have 40% of your receipts, the total receipts not passing through the fiscal registers, then it's quite a problem. And I understand Rwanda has been implementing these machines for some time. Maybe they've been doing this work for the past 5 years or so forth. So what could be some of the measures as we are implementing this for Zambia? I mean, from your study, just from your observations, one of the quick measures that you could implement alongside, introducing these machines to enforce the use. And from the second presenter, I just wanted to find out, of course, you didn't dwell so much on the results of your underreporting, extent of underreporting, or whether there was underreporting and so forth. But I'd love to find out if you found underreporting, a mismatch of the seller and purchaser invoices, what was the extent? I mean, as a ratio of the Ugandan GDP or as a ratio of the tax revenue collections, just to get a sense of that.
Thank you very much for those comments. Those were very insightful. I'll try to run through them just in the order that they were given. So I'll start with Denis's point. On the question of, so if I try to sort of summarize in a sentence what the first question that Denis has, how to combat the price penalty that customers face in the EBM stores. I think that's a great question. I think it's a hard question. I think there's some other ongoing work in Rwanda as well showing that it is really quite a prevalent issue, and there's no reason to suspect that this would not also occur in other countries. So I think this is a very general question that we should address. When I think of how to combat it, I have two main thoughts. The first is, and I think this is an area that should be studied in more depth. I think we should understand more the customer side. So why do customers shop in particular stores, in one store versus the other? And I think if we could understand better the extent to which customers are attached to certain stores, or if they are in fact very indifferent between certain stores and they only seek the lowest price, then we should try to think about how competition between different sellers could potentially be a way to combat this price penalty. So suppose that I'm a customer who, in principle, it's not that I have any attachment to one store, but I can go to any other store if I can be offered a sort of competing price. Then I think there should be a way in order to get the firms to not ask for this price penalty by basically the threat of customers just walking out the stores. And I think that's something that could be, if there are certain stores that in some sense don't enforce the price penalty, then the other stores that are willing to threat customers with the price penalty, they would face losing a lot of customers because they would just walk across the street to the other store. So that at least suggests that if we were able to just maintain a couple of stores that had good prices registered for EBM, but that did not enforce this price penalty, then maybe the other firms would follow because they would be very worried about losing their customers. A related potential intervention that a little bit comes back to a project that Adnan also mentioned is the issue of not necessarily bringing out the stick on the firm side, but bringing out the carrot. And by that I mean trying to reward the firms that implement the EBM machines and that through random audits or through kind of mystery shopper schemes are found to be not enforcing the price penalties and also just issuing most of their receipts through the EBMs. And again, this also comes back to understanding the customer side. If we think that customers value shopping in stores that are honest stores and that sort of want to help the country grow, then there's no reason to believe that to not believe that that customers wouldn't find an attachment to shopping in stores that, for example, from public display or other forms of communication are shown to be compliant with the wider government schemes. If I walk down the list, I think coming to maybe the final point that Yenda mentioned. So I would caution against, and I think this is also something that in the Rwandan case has come out in discussions. I think EBM machines are potentially very powerful because they generate a lot of information. I would, however, not think of it as sort of costless interventions. If you think of it from a firm's point of view and you walk through the steps from a very logistical point of view that are required to implement and fully function an EBM machine, especially for small firms, it's not actually a trivial matter at all. And I think there's also a general concern in a lot of countries that compliance costs, regardless of evasion, are really important. And I think there's an obvious trade-off between wanting to cover as many firms as possible, including all the small firms with EBM machines, when sort of weighing that against the actual compliance cost that smaller firms in particular can find very burdensome to implement an EBM machine. So I think there's an obvious trade-off between wanting to roll out EBM machines to as many firms as possible, because it has potential revenue effects, and a potential backdrop or sort of backfire that maybe a large set of the smaller firms will simply find it too costly to implement the machines and may exit on the sort of extensive margin of leaving the entire tax base, which is not something that we would want to happen. Yes, and just to the point mentioned at the beginning, it's incredibly important to give credit to the people who have helped out, and I'm very grateful to Denis and the rest of the sections of the Rwanda Revenue Authority. In particular, they have a very strong team devoted entirely to the rollout of EBMs, and they have been incredibly good and strong collaborators with us.
So thanks a lot for the very interesting questions and comments. So the first point was Denis's questions about the assumptions. So I'm just going to give a brief answer, but there's more detail that can be found in the IGC report that was produced in 2017, and it's actually mentioned in the VAT brief that was introduced earlier. And it's a report that is co-authored with Dorothy from RPD, and this is exactly in line with Millie's point, with which I totally agree that collaboration is the first prerequisite for any type of work of this sort. And so in that report, you can find all the details on the methodology, etc. But just to give a brief response, so yes, there's some assumptions to reach these figures of the revenue consequences. So for example, for the figures I was showing here, we were assuming that the misreporting was due to the sellers. But then we did the same calculations when we assign it to the buyers, and we find results that are the same order of magnitude. And so both types of results are shown in the report. And then we also take into account the rules for refunds when we're doing these calculations, because in Uganda, as in a lot of countries, firms don't get a refund as soon as they have a negative VAT liability. There's a threshold over which your liability needs to be for you to get a refund. So we take into account that rule to calculate the revenue consequences. And so the compliance program will allow to be able to understand what share of these revenue consequences can actually be corrected by these types of interventions, although it's focusing obviously on a subsample of firms. So then I guess we would need to extrapolate the results to see what would happen if it was spread out to the whole universe of VAT firms. On your other point about comparing consistency within taxpayer declarations. So I think this is very much in line with Millie's comment about the e-tax system, because obviously all this data work requires that the data be existing and submitted by firms in the first place. So in the e-tax system, at least the way it is in Uganda, there's an automatic check, meaning that the total individual records that are submitted by a taxpayer need to match the total value that is declared in the monthly summary part of the return. So that's mechanical in the system. Something that's not mechanical and for which we find some also maybe potentially interesting discrepancies is that the offset that you can enter, saying what were your offsets that you're carrying over from the previous month if you had a negative liability, that's not automatically updated. And so sometimes we find that a firm enters an offset that is actually larger than what was in the previous month. So yeah, obviously it's very, it's completely necessary to understand how the e-tax system works and where there's leeway for taxpayers to adjust and whether this is something that should be changed or not changed. And then on another of the comments on differences between small and large firms. So yeah, that's a very interesting point that we're starting to look into. And so I don't have any numbers for now, but something, for example, we're finding with the compliance program is that the type of response by firms is different depending on their size. So for example, large firms are much more likely to come and make a physical visit to the URA instead of sending an email or a letter. So the type of response is different. And obviously, we also think that what's happening afterwards in their declarations will also be different. And so I totally agree that this is something important. And the experiment was designed in a way where we can analyze by subgroup of firm size. So this is part of the results that we're going to be hopefully seeing in the few months.
Let me emphasize the fact that one of the takeaways from these presentations is, one, there's lots of information within the tax administrations, too much, but the usage still is on the lower rate. And these are just examples of how we can maximize usage of revenue to achieve the key most important aspects of a tax administration: compliance, and again, contributing to the revenue authority, to the tax administration, to the national coffers.